Why is pound sterling to US dollar surging today amid dollar weakness? Pound sterling forecast next week with Bank of England rate differentials. Currency trading setups for July 10th. Pound sterling to US dollar support and resistance levels to watch. Sterling technical analysis with RSI overbought signals. How Gulf sovereign flows impact the dollar index. And what the MACD flattening means for cable traders heading into the London close. The pound is pushing into a zone where 70% of retail traders are long. The RSI is heading toward overbought on the daily, and CCI just hit 130 on the 1H, but the dollar is getting absolutely demolished from three different angles today. There is one danger zone and one hidden opportunity right now. I'll show you both. Here's the thing nobody's talking about. 1.3431 resistance has been tested twice in the last 72 hours, and both times, price got rejected like it hit a glass ceiling. But the momentum indicators on the weekly and daily are still showing strong buy signals across every time frame from 1H to weekly. So what's the real story? The real story is that sterling has a stronger rate story than the euro, but the market has already priced a lot of that narrative in. What you're about to see is a high probability setup that most traders will completely misread because they're staring at the wrong time frame. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Every level is already marked. Let me cut through the noise. This is a strong buy trending structure on the 4H, daily, and weekly. That's 3 time frames all lined up in the same direction, and that's rare enough to demand attention. But here's the critical nuance. The 1H trend is also showing strong buy, but momentum is flattening. The MACD on the 1H is reading exactly 0.000, which means we are at a precise inflection point. This is what I call trend momentum with exhaustion, and it creates the perfect environment for both scalpers and swing traders. Write this number down. If we break and hold above 1.3431 today, the entire structure resets to a breakout scenario with targets at 1.3467 and 1.3520. And this is the part that separates winners from losers. If we reject that level with a confirmed bearish candle on the 1H or 4H, we could see a fast retracement back to the pivot at 1.3376, with the 50-period moving average at 1.3363 acting as the primary support. The herd? They're overwhelmingly long pound sterling to US dollar right now. Retail positioning is showing nearly 70% long, which means the market is positioned for dollar weakness. That's exactly the kind of overcrowded trade that gets flushed out when institutions decide to run stops. The invalidation level that flips my entire bias? A daily close below 1.3340. If we print that, the weekly structure starts to crack, and I'll be reassessing everything. Let me take you through the chart from the top down, because this is where the real edge lies. Weekly time frame, we are in a clear buy structure. Price is trading well above the MA200 at 1.3371, and the weekly trend has been firmly bullish for the last 4 weeks. The ADX at 32.34 is showing a trending market, not explosive, but trending, which means we have directional conviction. Daily time frame, this is where it gets interesting. The daily is showing strong buy, but price is now trading between the MA100 at 1.3388 and our 1 resistance at 1.3431. The MA20 at 1.3334 and MA50 at 1.3363 are both sloping upward, which is textbook bullish structure. But the RSI on the daily sits at 58.30, that's not overbought yet, but we are climbing. And the Williams %R at -5.82 is flashing extremely overbought conditions on the shorter intraday timeframes. That's a divergence forming, price making higher highs, but momentum failing to confirm. Moving averages are your guide here. MA20 at 1.3334, this is your dynamic support on pullbacks. MA50 at 1.3363, currently acting as a magnet for price. MA100 at 1.3388. The level we just broke above this morning. MA200 at 1.3371. The big structural support on weekly. Here's what most traders miss. The MACD on the 1H is at 0.000, while the 4H MACD is showing bullish momentum. That's a classic timeframe divergence that suggests a pullback on the 1H before continuation on the 4H. Key levels you need to memorize: S3, 1.3249, major structural support, S2, 1.3285, weekly pivot zone, S1. 1.3340, daily support and MA20 zone, pivot. 1.3376, today's decision point, R1. 1.3431, immediate resistance, this is the wall, R2. 1.3467, breakout target, R3. 1.3520, extension. Target. The ATR is at 0.0075, which means we are looking at about 75 pips of average daily range. That's enough for solid scalps and gives us clear parameters for stop placement. Let's talk about the real fuel behind this move. The 24-hour core news. Sterling today, pound firms as Gulf strikes life into dollar, oil. What does that actually mean in plain language? The Gulf sovereign wealth funds, Saudi Arabia, UAE, Qatar, have been massive dollar sellers recently, and that flow is directly benefiting the pound. When you see headlines about Gulf strikes dollar, that's code for a lot of money is moving out of USD and into GBP. At the same time, oil prices are falling. Crude is down 1.8% overnight, and that reduces dollar demand from commodity producers and lowers the dollar's commodity currency bid. That's why we are seeing USD weakness despite the Fed's hawkish narrative. The cross-asset linkage is crucial here. AUD-USD correlation. AUD is the Asia risk barometer. If AUD is rising, risk appetite is improving, which generally supports sterling. The two are moving in tandem this week. EUR a GBP cross. You need to watch this. If euro to pound sterling starts to break down, sterling gets an even bigger bid. The fact that GBP is outperforming EUR is telling you something about interest rate expectations. S&P 500 risk sentiment. Strong equity markets support the pound because sterling is a pro-cyclical currency. If S&P futures are holding, cable can push higher. If we see a risk-off move, the pound gets sold. The 1 to 2 week directional lean. The bias remains bullish as long as we hold above the MA50 at 1.3363 and the fundamental backdrop of Gulf dollar selling continues. But the next key event is UK GDP data due Thursday. That's the wildcard that could either accelerate the breakout or trigger a sharp reversal if the number disappoints. Do you think the pound breaks 1.3467 this week? Comment yes or no. I'm tracking consensus. The invalidation event? A sudden spike in oil prices or safe haven dollar buying on geopolitical news. Keep your stops tight. Most people skip this section. That's exactly where the money is made. Keep watching. I'm going to give you 3 distinct setups based on what I'm seeing on my screen right now. 2 scalps, 1 swing. Each one has exact levels, exact stops, and exact targets. Strategy 1, the opening scalp, scalping, high probability. This is my opening snipe based on the 5-minute structural setup right at today's critical intraday level. The trigger condition. I'm watching for price to tap 1.3431 resistance and print a bearish engulfing pattern or a shooting star on the 5-minute time frame. We want to see a clean rejection candle with a long upper wick that confirms sellers are stepping in at this level. The entry, 1.3425, that's after the bearish engulfing confirms, selling the retest of the broken level. Stop loss, 1.3440, that's 15 pips above the entry, just above the daily R1 resistance level. Why this stop? Because if price breaks and holds above 1.3431 with conviction, the scalp narrative is completely invalid. Take profit 1.3400, that's a 1.66 to 1 risk-reward ratio, 25 pips of profit. It's a clean scalp, fast in and fast out. Take profit 2, 1.3376. This is the pivot level, about 49 pips below entry. That's over 3:1 risk-reward if momentum accelerates. I'll trail half my position once we pass through 1.3400. What instantly voids this scalp? If the 5-minute candle closes above 1.3431 with bullish conviction, meaning we get a solid green close with no long upper wick, this setup is dead. In that case, I'm looking for a breakout continuation instead. The opening SCLP entry, 1.3425, bearish engulfing at 1.3431 resistance, stop loss, 1.3440. Take profit 1, 1.3400. Take profit 2, 1.3376 risk, reward, 1:3.2R to TP2 invalidation. Void if 5M candle closes above 1.3431. Strategy 2. The liquidity grab, scalping, counter noise. Now this one is for the traders who understand how the market hunts liquidity. This is the counter scalp that captures the stop hunt. The setup. I'm looking at the 15-minute chart, and I see a clear stop hunt zone right above the 1.3431 level where breakout traders will place their buy stops. These are the stops that get triggered on a false breakout, and institutions love to run them before reversing. The trigger condition. Price pushes above 1.3431 to trigger the breakout stops, then prints a bullish to bearish reversal pattern, a fake breakout candle with a long upper wick that closes back below 1.3431. This is the classic breakout trap. Entry. 1.3420. This is after the fake breakout confirms and we get a 15-minute close below 1.3431. I enter on the retest of the broken level stop loss, 1.3445, just 5 pips above the fake breakout high. If price continues running past that high, the trap has failed and we need to get out, take profit. 1.3385. This is a 35 pip move that targets the liquidity pool below the pivot point. The nearest intraday liquidity pool is sitting at 1.3385 to 1.3376, and that's where the fast money will take profit. Risk reward. 35 pips profit, 25 pips risk, 1.4:1. It's not the biggest risk reward, but the probability is higher because you're trading with the institutional flow, not against it. Warning. This requires fast execution and disciplined risk management. If price clears 1.3445, the setup is void. The liquidity GROB entry. 1.3420, 15M close below 1.3431 after fake breakout, stop loss. 1.3445 take profit. 1.3385 risk, reward. 1.4:1 are invalidation. Void if 15M candle closes above 1.3445. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, trend alignment. Now for the bigger picture. This is the trade I'm looking to hold for 2 to 3 sessions, targeting the weekly structure. The fundamental setup. We are in a strong buy structure on the 4H and daily. The 4H trend is strong buy, the daily is strong buy, and the weekly is buy. 3 time frames stacked in the same direction. The trigger condition. I am waiting for a 4H candle to close above 1.3431 with bullish conviction. But I'm not entering blindly. I want to see the 4H MACD cross above 0 with a bullish histogram. That's the momentum confirmation I need. Entry. 1.3435. That's entering after the 4H close above resistance with confirmed momentum. I want to see price establish itself above the wall, not just kiss it. Stop loss. 1.3360. That's 75 pips below entry, placed below the MA50 at 1.3363 and the daily S1 at 1.3340. The logic is simple. If price breaks back below the MA50, the daily bullish structure starts to break down and the swing trade is no longer valid. This is a structural stop loss, not just a random number. Take profit 1.3467. This is the daily R2 level and represents a 1.3:1 risk reward at 32 pips profit. This is where I'll take partial profits. Take profit 2. 1.3520. This is the daily R3 level and the 1:2 risk reward target at 85 pips profit. This is the extended target based on weekly structure, trailing stop rule. Once price reaches halfway to TP1, around 1.3451, I'll move my stop to break even at 1.3435. After TP1 is hit, I'll trail stop to 1.3440 to protect profits while letting the rest run to TP2 to explicit invalidation level. If price fails to break above 1.3431 within the next 24 hours and instead prints a daily close below 1.3340, the medium-term outlook shifts from bullish to neutral and I'll re-evaluate all swing positions. The session SWNG entry. 1.3435, for H close above 1.3431 plus MACD bullish cross, stop. Loss. 1.3360 take profit 1. 1.3467 take profit 2. 1.3520 risk, reward. 1:2.0 are invalidation. Void if daily close below 1.3340. Let's talk about survival. Never risk more than 1 to 2% per trade on the swing setup. The scalps? Even tighter. 0.5% to 1% max per scalp because the frequency is higher and the noise is louder. Scalps demand even tighter risk because you're taking more trades and the statistics compound quickly. No positions through high-impact news. UK GDP is coming Thursday. If you're in a swing before that print, make sure your stop is wide enough to account for potential spike or, better yet, reduce size before the data hits. Stops are non-negotiable. I can't stress this enough. Every single one of these setups has a defined stop loss. Moving your stop wider because price got close? That's not trading, that's gambling. This is how you survive to trade the next big move. Let me summarize what matters for tomorrow's session. The single most critical level for the next 24 hours is 1.3431. If we break and hold above with a 4H close, I'm looking for 1.3467 and 1.3520 on the swing trade. If we reject with a bearish 4H candle, I'm scalping the downside to 1.3376, maybe 1.3340. Here's the visual cliffhanger. If this level breaks above 1.3467 in the next 3 sessions, the entire monthly trend accelerates, and we could see 1.3600 before the end of July. That's the kind of move that changes account balances. If you want the full breakdown on trading commodities and Australian dollar to US dollar, Japanese yen, euro, dollar, and Bitcoin in this macro environment, those videos are live now. Tap the end screen right here. I'm covering the S&P 500 gamma levels next, and oil's geopolitical heartbeat is setting up for a major move. The playlist is waiting. Then hit the bell so next week's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. This is how we build a community that actually profits together. Scalp the noise. Swing the trend.